Japan's making some move with interest rates. Not sure if the market likes that. Earthquake in California to shake up things. Amazon, the top pick for 2023 from JP Morgan. Is that thinking out of the box or what? Time to talk commodities. Gold's on fire. Gold's over 1800. We're going to bring on Angie Setzer. She's been helping us follow these commodity markets at 835. Stocks are getting hit, folks. Not much support. Let's see what we can do about it. Let's welcome back Mitch, the birthday boy. Roll the intro.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, let's take a look at the S&P spiders. Throw out the high, throw out the low. We're down 10 handles at 38, 35, 50. Boy, oh boy, we had a big break overnight. We'll see if we get to that pre-market low of 0350. The dollar, after the moves by Japan, that's holding steady at 104.65. TLT doesn't like it. The bonds don't like it. They're down $1.38 at 103.93. That's your TLT. Crude just hanging out in the mid 75 handle, 75, 76. We're up 50 cents at 75.88. Gold futures, they like gold likes uncertainty. That's what we have now. Up 12.10 at 1809.80. Silver did trade in a 24 handle, but only up 56 cents now at 23.76. And Bitcoin, just being mild-mannered Bitcoin, up 280 at 16,775. Let's bring on Triple D, who actually was probably sleeping during the low of the move, and the birthday boy, Money Mitch. How you doing, Mitch? Let's talk about the birthday. Now you are legal, right? You can buy alcohol.
Yeah, exactly that. You know, they say 10 years younger, right? I'll take it.
Right. Well, welcome back to a busy morning. Triple D, what's got your head on a swivel there?
Everything.
What are you seeing in the pre-market trading?
Right now, Netflix. I'm actually getting the beats on it here too. I'm trying to work out of a position, so I will hold my comments on it. But it just broke news here right at 8 o'clock, so it's always the way it is.
Holy mackerel!
You see the
Mitch,
little
give us
sell-off.
the news.
I just found out about it. Even Dennis knew before I did.
Subscriber data here, which obviously we heard about
right.
some of this from what it was the place called again? Data.
Digiday. Digital monsters, you know, Digimons.
Digiday.
You know.
Wow.
I'm looking.
anyways.
What do you see there? What do you see on the news?
I'm seeing that subscribers to Netflix's advertising, it's got subscriber data here. So I don't have the breakdown on it, but it looks like at 8 o'clock, some numbers came out. Newer returning customers account for 57% of Netflix's ads. It's Wall Street Journal. It's all coming from the Wall Street Journal.
Okay.
Like I said, I don't have it in front of me. I do have a small trading position in it, which is not going well right now. So I'll limit my comments, but trying to control damage control.
All right. The only thing I could say is that there is a daily low at 275.94. That was on November 29th. You had a nice rally that day, and you continued higher after that. So right there, that's what I'm looking at, 75.94. You haven't quite hit that yet. Pre-market low as we speak is at 77.10. They're throwing a few shares around here. So we'll have to start following that Digiday or digital media or whatever they are.
Like they knew what they were talking about.
Yeah, they knew what they were talking about. Go ahead, Mitch.
I'll give you what the Wall Street Journal is reporting here. Of course, they're saying that pretty much the ad-supported tier was the least popular plan from Netflix. It said that it only accounted for about 9% of new signups in the U.S. I don't know if this is necessarily that negative. I mean, everyone was expecting the ad tier to save Netflix subscriptions. Maybe that's the outlook that you're looking at it in such a negative. But it's not saying that they're not getting subscribers on their other platform, right? It's not saying that they're not getting it on full price. So who knows? Maybe they're just paying the full price and they don't care about ad support. I know I'm not a fan of ads, and I will specifically pay to get around that, but maybe that's what the other consumers are doing also.
I just sold my overnight position, took the loss. I don't even think it's been mentioned on CNBC yet. So
yeah, it's been slow.
Sometimes you just got to eat the losses. You have an overnight trade, it gets hit with random news. This is one thing with overnight trading. When you hold so many positions, eventually, you're going to get hit sometimes with news that hits you overnight. Sometimes it's good news, sometimes it's bad news, sometimes it's good news that's interpreted as bad news. It's funny how that works, but sometimes you just got to eat the losses. The whole thing is in trading is eat the losses when you can.
Move on.
Eat the loss, move on. It was interesting that the thing was down the entire pre-market there before the news. So obviously somebody knew that news was coming, and it does. So it's down $8. Again, I had this in the long-term account. The reason I have it overnight is just an arbitrage trade, so that's completely different. But the reason I had it in the long-term portfolio was I liked the valuation back when it was 16, 17 times earnings. I don't like the valuation now that it's come all the way up to 27, 28 times earnings here, and now they're trying to figure it all out. And I also believe we're still going into a recession. That's why I sold the stock at 307 there 6 trading sessions ago. The next day, obviously, Wells Fargo upgraded it, and I was mad about it because it went but I'm feeling pretty good about that sale now.
Yep.
You're pretty good on that exit. I just want to say, without looking at your charts, Dennis, where do you think Netflix ended 2021?
Oh gosh, where did it end? 2021?
Yeah.
Oh, probably like $700 or something like that.
Wow, 602.44.
Yeah, it's just been crushed. I mean, it got crushed down to a point where I feel like when it was in the 100s that there was value there. Now you just doubled your way out of there, and I mean, we really did. I mean, if you're coming in now, it's we're up from 164 back in the in the spring when everybody thought this was going to zero. And there was a good opportunity there. It's where I doubled down. I actually probably tripled down at that point in time. And it ended up working out for me because I had obviously bought the first, bit of it way too high. Again, valuation matters. Valuations just become stretched at this point in time. But, with that being said, things can happen here. It's not crazy expensive like it used to be. I just don't want to own stocks. I'm still at this point here. And, we've been correct with this, switching to the bearish theme. I didn't like it with the reaction of the CPI. And, I was tweeting multiple times that day that I think, it's not a lot of times that you should be selling the dip. But, when we ripped that day was obviously the opportunity. But when we gave it all back, it was a sign that, man, this is not looking good. And, then we were up the next day before Powell spoke, and then Powell spoke, and we've been straight down ever since. So, I mean, I think you still got to be selling into strength. You still got to be selling into rallies. I think there's still a lot of pain coming. And I know I'm sounding like a broken record here, but I keep saying it because we've been right about it. I think you got to be selling into strength on everything. I mean, here's my case in point here, Joel. I mean, look at Adobe. Comes out, good earnings report. Stock pops up on the good earnings report. It lasts a day and gives it back. I mean, if you're buying the rip in this market, you are absolutely doing it backwards, even on the stocks with good news. It was good. It was up for the full day, and you're like, it's up $20. Here we go. Now, here we go for the bears again. It's just another opportunity to sell. And we've seen this again and again and again to the Tesla news yesterday. I mean, you'd think this was the news that all the Tesla bulls were looking for here. And then, it can't even hold the gains for a day. Like, it can't hold the gains for one day here. And I know you were away there yesterday, Mitch, but I mean, I'm sure you were watching the action. I mean, you get the poll, you get him. He looks like he's going to, potentially eventually step down here once he finds a successor from Twitter. And the stock just cannot catch a bit. It cannot get any momentum going to the upside. It's, getting hammered with tax loss selling now. And there is some people anybody who bought this thing in the last couple of years is down in it. It's getting hammered with just the growth story. It's getting hammered with the higher valuation. I mean, eventually there will be some point of a turnaround here, but stocks can't rally on good news telling me that we're not near the bottom yet.
Did you see
And
Gordon taking his victory lap on
Yeah, on
CNBC?
CNBC. You gotta love Gordo.
I
And you
mean,
know what? Gord Johnson comes on our show. He's been coming on our show for the better part of a decade. You know, we're one of our first people that's coming on this show. And he's hated Tesla all the way up, and he hates Tesla all the way down. So he's wrong all the way up. He's right all the way down. But you gotta love his energy. I mean, who brings more energy than Gordo? You know, he brings the energy.
You?
I try
Yeah.
to bring the energy.
I don't know if it's an excess amount of Red Bulls. I don't know what it is, but it's something there. In Dennis' case, it just might be waking up in the morning, but
yeah.
that's just how it is.
Well, when you go to bed with, what you probably had a light night, maybe 30, 40 positions or something, Dennis, and then
Usually 60 or 70 is a
60
lighter
or
night. If a heavier night would be over 100.
yeah, okay.
Unfortunately, Netflix was one of those. So, and it's coming back a little bit here, but I've eaten the loss here.
What do you hedge that with? The Qs?
Yeah, it's just part of it. I mean, and you got the Qs and you got a little bit. I'm doing like the index herb. So I'm like, I've got a little piece of all of it. But sometimes I'm not like an HFT. It's got it all perfectly. So, you might have this a little bit heavy and you might have this a little bit, I put a little spin on it too. You got a little feel on it, a little church, a little spin. I put a little spin on the index herb. And
creative arbitrage is what
that's what it is.
Call
It's creative arbitrage. Well, it didn't create very
a little
much.
bit here, a little bit there.
You
just mix it around. Well, it seems like Dennis, you are pretty much doing what our topic of the day pretty much is, right?
What is that?
Tax loss sell-off. It seems like we've been having that. It seems like you might have just taken some tax loss.
I did just take some tax losses. I will take everything. So I typically, and this is a good thing for all you bag holders out there, what I typically do, everything outside the RSP. So RSP or inside, that's a taxable account. If you're in Ontario or Canada, you have what's called an RSP. Well, the whole account's taxable at the end of it when you withdraw the money. So there's no writing off anything in your RSP. It's all taxable. But anything outside the RSP, I clean up the portfolio in December every year. I'm like, this was a dog, get rid of it. This was a dog, get rid of it. I get rid of all those losers because I'm trying to minimize my tax bill. I mean, I guess if you've got, if you're not making money or if you're down on the year, then maybe you're not going to have as much tax loss selling. But there's still a lot of people that probably had okay years. You are seeing tax loss selling here coming across the board. It's been happening, but yesterday was happening even more. I mean, a stock like Affirm, you got stocks like Tesla, you got stocks, just go to all the Kathy stocks. ARKK, new 52-week low yesterday. The likely, if you're looking for seasonality, the likely turn in these things is probably January 1st when the tax loss selling is officially over. One thing to consider is that some countries, Canada being one of them, go with the settlement date, or go with the trade. Some go with the trade date, like the U.S. Some go with the settlement date, like Canada goes with the settlement date. So actually, if you're Canadian, you have to sell by like 2 days before the end of the year to still get in there because they go with the settlement date. So technically, you can see some of that tax loss selling stop a couple days before the end of the year. But we're in tax loss harvesting season. We talked about it yesterday on the show. It continued and worked like a charm yesterday. All that usually says is the stocks that really underperformed in 2022 continue to underperform in the last week or so of the year as people are just like, yeah, get rid of it. Yep, get rid of it. Let's minimize my tax bill. Get rid of it. And that's it. It's silence. That uncomfortable silence.
I thought Joe was just jumping in here, but he's on mute. That's what it is. He's on mute. That's what it is. I was letting him speak.
Gets mad when I drink
off.
coffee or I drink water, so I have to.
No, I know. I don't like slurping. I like this thing about slurping. I don't like hear slurping. Okay, next. Sorry, Joe.
All right,
not that you slurp, but you hear people drinking. I don't like it.
Well, definitely, I'm sure there's some tax loss going on. And of course, a lot of those names are probably in ARKK. There's a reason why I'm long the SARK.
The SARK?
I'm SARKing. I'm SARKing it right now, man. I'm SARKing it. Look at that monthly chart on the bottom right. Joe would have been proud of me.
Well, one thing I'll say is, why not just short ARK as opposed to going long SARK? So I'm going to just, it's a little rant here. And obviously, maybe it's Robinhood because, you can't short stocks. I don't know if they ever changed that rule, but
borrowing costs.
I just never, people always ask me about these products, these short products. I was like, Why would I use those? Why would I not just short the stock? Why would I go and buy a Tesla inverse stock when I just short the stock? So, I
From the
mean, I
way that
get
it
it
was
though. Robin Hood, he
created,
can't. It's a way to get around rules and
yeah, from the way it
whatever.
was
But
created, it was meant because the borrowing from ARK is more expensive than going long SARK, from what the intentions of the creation of the ETF were, Dennis. So looks like borrowing costs on ARK sometimes are expensive. So that's why SARK was created.
okay, so it's trying to help with those borrowing costs.
Yes.
Okay. There's always going to be a little underperformance in these things, though, because if you look, ARKK is making new lows, but SARK is not making new highs.
That's
So
why
there
I'm
is,
playing the lag.
and that's with borrowing costs. I'm sure they do it all through swaps, so there's going to be spreads that they're paying to get these positions on all the time. Daily rebalancing happening in some of these things. I don't know if on SARK, I don't know how it's all structured. I haven't looked at it all. But, you just got to watch on some of these products. There is some expenses to continue to run them. As you've got, spreads are paying and moving, and it's not just as simple as we're just, short all of, the main components here. But borrowing costs are always an issue, and it's been an issue since 2007, 2008, especially on some of those thinner names that are really hated.
Yeah.
Depending on the account that it's in too, if it's in an IRA account.
Lots of variables here.
Yeah. But I noticed that SARK, it's not hasn't even reached it, really an underperformance. I guess people got real excited when this thing and when was this? When
they just
went over
underperformed, Joel.
$80. Yeah.
To run it. So you're never going to be clean. Because, like Mitch says, the borrowing costs. I'm sure they do it through swaps. I don't know. Again,
yeah, they do it through swaps.
We have Matt Tuttle. Sure. We can have him on the show. Matt's great.
Yeah.
I speak with Matt. He's awesome. We love you, Matt. It's the cost that is underperform a little bit there. There's nothing you can do about it. I mean, you're running a product. There's costs involved in shorting stocks. It's not just you don't get the whole thing. When I short stocks, every single month at the end of the year or every single month, I get, my bill, like it shows up daily, but then they calculate it all and you can, you've got the short every single day. Actually, you're paying short interest. So you're paying, interest. You do get some money back in, but the way the brokers do it, it's kind of, it sucks that if you're long short, they give you the credit on your long positions, but they charge you the debit on your short positions, but they charge you different rates. So they're grabbing a spread there too. So you could be actually net long. Like I could be like, I'm short more stocks, I'm long, so I actually have more cash, in my account. But because they do it on the debits and the credits, I actually still get a fee in there because it's more expensive on the short side. But then there's not only the interest, but there's the borrowing costs as well. Because you got to go out, you got to find the stock, you got to borrow it, and those borrowers get paid. The nice thing about IB is that you can actually lend your securities too, and they give you half of it. So I didn't know if you realize that, Joel, but IB is one of the only brokers that passes that through. So if you're actually if they're borrowing from if you lend out your stock, they give you half of that. Obviously, they're doing work in the background, the computer is, but they give you half of it, which is kind of nice. So I'm in that program where if I've got some longs, they give you a little bit of fees for lending out your stocks.
I'm just running through some of the beaten down names in ARKK here, like Fate. And I'll scroll back a little bit so you guys can see the price action. This is late, and a lot of these companies are just hard hit down and not looking good. Tesla's down on the RSI to 1180. Put it this way, doesn't happen very often at all there for Tesla. Eventually, I feel like we will get a bounce, but that doesn't mean that it has to happen today, right?
I thought it was going to happen yesterday.
Yeah,
Joel, we thought when you were away, Mitch, we're like, this is the news that the Bulls needed. I would have thought, other things being equal, if he ran a poll and said he's basically going to abide by the poll, so meaning he's going to step down, I would think Tesla would pop 10% on that. It popped 3%, 4%, and then they gave it all back. It's just there's so much more going on here than just the fact that the Bears have been like blaming Tesla, or the Bulls have been blaming Tesla or blaming Twitter for their Tesla performance. Blame. Meanwhile, a lot of this is just multiple contraction. A lot of this is just recession fears. There's multiple things knocking Tesla down, Twitter being one of them, but maybe not as much as we think it is. Because, it's trading 40, 50 times earnings. And yeah, I know going forward, they're calling 27, 28. Those forward earnings are on projection zone. If we go into a recession, there's going to be a lot, those numbers that they're projecting may not grow nearly as much as what these bullish analysts who are paid to be bullish are going to be. So you look there, you think, 27 times on bullish forecasts here. I don't know. I don't know if those forecasts are going to hold. And then if there's damage happening to the brand, which is a whole other problem with the Twitter, there could be, I don't think it's going to sell less cars next year, but I think the growth that some of these analysts are forecasting for next year is not going to be there.
You don't hear much from, like Ron Barron. When Tesla was, piping up, and I don't know, before the splits and and the outrageous price targets, and now and you know what I know people say that we pick on her, but like we never mention Kathy anymore. Does she still publish or?
She just bought some more. Don't worry, it's okay. She hasn't changed her tune at all, Joel. She just bought some more Tesla.
Dennis, do you even pay any attention to that email anymore with their buys?
No, I unsubscribed. She's irrelevant. So I've unsubscribed to it. So you had the Kathy
Wood
and the buys and she bought something that's going to pop. Nothing moves when she buys it now. She has no play. That's why it's even getting worse for her. Mark Shake said that a year ago. She's becoming irrelevant. He was absolutely correct. They don't talk about her much on CNBC anymore. We don't talk about her much anymore. The worst thing for you is to become irrelevant. It's one thing to be wrong, and everybody's talking about how you've been wrong. It's a way worse thing to become irrelevant, because then people are not even just interested at all. And that's bad. But I mean, let's be honest here. She's talking. Did you see her interview like a week ago? She's talking about ARKK and saying she thinks this could go up 30-fold. Her fund can go up 30-fold, I think she said, in the next 10 years. 30 times she's looking. She's looking to make 3,000% on her fund in the next 10 years. That's what she's saying now. So she says basically ARK is going to be $1,000 ETF is what she's calling now. But if you just call it what it is, she was a one-trick pony. She had Tesla. She put a lot of eggs in that one basket. She made this crazy price target, and it came to fruition, and it made her a Wall Street darling. What has she done besides that Tesla crazy call, which had no business being up there anyways? But she called it right. She got it right. Tesla grew like crazy. That was good. But, obviously now you look and you think all of her other stuff she's bought, she's trying to call all these other Teslas, have all been bad. She's down. Like, I mean, go far enough out. I mean, ARKK is where it was in 2017. She's massively underperforming the Qs. So you can't say, oh yeah, it's just a bad year for her. No, she's had some awesome years. Tesla drove the bus. It was all Tesla performance. Her other stocks got on the hot stories, and everybody's like, anything she buys is going to go up. And it just didn't work out that way. She paid too much for growth.
Hey, she was a part and also the downturn in the bubble. That's the way I feel like it was.
But people think she's going to turn it around.
Well, the bubble would have to come back. And I don't think the bubble's anywhere near. We're not in economic expansion.
Well, let's have a fun session and go through her top holdings. Let's just do it, Joel. We've got some time here. The markets aren't too crazy.
We can just do it very simply.
Let's go to the ARKK top holdings, Mitch. Maybe you can even show them. Do you have like a list where you can grab them from?
Yeah, I can. I know them pretty much. Zoom, Roku, and then
we know them. But let's just look at the actual list. Let's get a feel. We'll go to the main one, the flagship fund, ARKK.
I got it right here.
The number one holding in that is now Zoom. The number one holding, and there's some value there. They have some cash. It's not a zero. They, were the pandemic darling. But what have they done besides create the Zoom product, which everybody else has now created in the competition? I mean, we started this show on Zoom, and we're on StreamYard. We moved to something that was cooler. So, I mean, there's so much competition there.
Zoom,
really tough. She's talking about disruptive technologies. Zoom disrupted for about a year, but it's not disruptive anymore. Why is it still there? Why is it her number one holding? Why does she continue to buy it? I hope she's listening, because I'll tell you what, Zoom video is not disruptive technologies. This is supposed to be disruptive. It was disruptive. It should have been sold when it became not disruptive, because there's other things disrupting Zoom. StreamYard, that we're using right now, disrupted Zoom. You've got Microsoft Teams is majorly disrupting Zoom. So 9.38% of her fund is supposed to be disruptive technologies. I wouldn't even say that's disruptive anymore. So, and then Exact Sciences, which had a nice pop there a couple days ago. Sellers come right in again
on Thursday. Did she buy this on the pop? I think she bought this on the pop, man. That's what
she doesn't buy the pop. No way. She only buys dips. If she did, that's
gave it all the way back.
I'm looking right now, but It says, she sold a little bit on the pop. She was trying to add some more to her Tesla, so she took some profits. Can't
And she
blame her.
wants to buy Tesla. She got 7.44% Tesla, but Tesla's still not cheap. Tesla is not a zero. Tesla is disruptive. Tesla still fits the bill. I think she should still own some Tesla because it's her fund. Roku, how do you get streaming television? Yeah, a lot of us use Roku, but there's all kinds of other things disrupting Roku now. It's the same story. The one-trick pony. They got the little thing you hook up so you can get on, streaming. Well, they're all built into the TVs. Some of them are Roku devices built into the TVs, but some of them are not. We're all going streaming. It's all being built in. It's TiVo Part 2. And we've been saying that for a long time. We're being proven correct. So sorry, that's getting disrupted. Made a new 52-week low yesterday, deservingly so. I love Square. It's her fifth holding. I like Block. It is disruptive technologies, but the valuation's still too extreme. She's paid too much for it. I originally bought this thing at $35 and I sold it at $65 because I thought that was a pretty good move. Then it went to $300. So I obviously sold it way too soon. But I don't know. What are your thoughts on these holdings here, Joel? They're all the same story.
Just all the charts look the same. All these charts look the same.
Yeah. It's amazing to be able to pick them this bad. Like, I don't know how it's even possible to actually be able to pick them this bad. Is there any money manager that's going to have a performance? What is her fund down? It's like 85%. Is there anybody doing that bad? Anyone?
I mean, she's still getting some inflows somehow.
People want to think it's going to turn around. But I think a lot of these things, I think Tesla could stabilize and eventually go high. So let's just look at her top 10 hold. I think Tesla could stabilize, maybe eventually go higher, but it's still too expensive for me. I think Square could stabilize, eventually go higher. I think Zoom is getting disrupted. I don't know. Follow the exact sciences story. I think Roku goes a lot lower. Path, I don't know what the hell Path even is. Shopify is in there. I like Shopify. So there's a few stocks I like.
She started mixing in a lot of health in this one, and I think that's where also her demise will come from. I think that she's depending way too much on therapeutic stocks, on genomic stocks, and I think that in the long run, that technology is going to take longer than she expects. So that's my only problem here. I understand some of her outlook and, buying Tesla. She thinks, it's the best EV. Roku,
I think it's
she
the best
thinks
run
it's
company.
a disruptor in streaming. Block, she thinks it's the best payment platform. And then when you look at the other ones, I think it's just bets to the upside. Like this Exact Sciences, it's just a bet to the upside with a biotech. And I think, in the long run with these kind of companies underneath ARK, they can always go bad, right? Especially the healthcare stocks. Something goes bad. Next thing you know, they get hit hard. I think it's too much risk. I know I wouldn't want to be a part of ARKK.
It's all still valuation, and multiple contraction has just murdered her and paying too much for these companies. That was the problem. I love some of these companies. I don't own any of them because they're all still too expensive.
Even so here, Square,
even
Square is what? Maybe 30 times. It's gotten reasonable. Bad. Maybe I could see you making money in Square. I could see you buying at 60 and 10 years from now. I think Square is higher. I don't think it's 30-fold. She's saying some of these things. What's going up 30-fold in her fund? Not Roku, not Zoom, Tesla. Tesla's not going up 30-fold from here. Not. What is it going to sell? It's got to get into some other stuff if it's going up 30-fold from here. Shopify is a fantastic company. I could see Shopify going up significantly, but again, it's the same story. It's too expensive here. In this market, it's way too expensive.
Square benefited from the Bitcoin.
I just don't see no 30x here happening in 10 years in a lot of these stocks. So if she's going to go 30x, she needs to get some different stocks. Here.
I mean,
it's
30.
Nonsense is what it is. It's nonsense. She's just trying to talk up her book and get more people to come in. Yeah, I'm going to, I'm down 80% this year, but eventually we're going to be up 30 times and be so happy you invested in me. It's just hopeful talk. It's just gibberish. Wow. Anyways, we should
losing 60. It had good support, several 3 lows at 60. It's breaking through there now. Unfortunately, your next daily low doesn't come into 57.09 is your next daily low on this. But let's see if the bulls come back and defend this $60 level. But still tax loss selling. This ended 2021.
I don't own. So full disclosure, chat saying, why do you like Square so much? I'm just saying I could see Square as being an okay one. I don't own Square. I don't like the valuation. I don't
Yeah.
own. I'm looking at all 10 of these. I own 0 of these. The only way I would indirectly is maybe through SPY, and I'm mad that they put Tesla in there at that high price. I don't own one of these stocks, not a one. You know why? Because they're all expensive. So
All right,
valuation matters.
let's get back to the overall market.
Yeah.
We can talk about what happened in Japan. Of course, there was news that came out that happened to shake the markets up. We were up a little bit on this news, but didn't really hold on. We'll see what happens in the overall market. Seems like we're just going sideways right now. The Bank of Japan caught markets off guard by tweaking its yield curve, allowing the yield on the 10-year JGB to move 50 basis points either side of its 0% target. They said that this is going to improve market functions, encourage a smoother formation of the entire yield curve while maintaining accommodative financial conditions.
What do we have at
Dun,
8:30
dun.
here? We're taking another leg down. S&Ps are falling. Housing starts down
We're in
0.5%.
this
I mean, housing
death by
starts haven't really
1,000 cuts
moved
right now. Portion of the
markets
market.
too much. I think the market's liking to attach itself to anything that's negative right now. So, of course, housing has been coming down about 30%. I think in the long run, we need to keep in mind about housing. I know that some people think that, this isn't going to be 2008 financial crisis, but in the long run, with interest rates held high and the way that we're looking on housing, I'm not so sure that, we can just quickly say that this isn't 2008, because in the long run, if the demand is going down, interest rates are going to be higher for a longer period of time. Who's buying a house? That would be my outlook there.
I know these home builders. We had the one, we've had multiple people. I've seen it on CNBC.
I have a graph here for
jumping
us
on
here.
there saying, buy the home builders. They're so cheap. They're looking at 5-6 times earnings. There's a reason, though, these things are trading 5-6 times earnings. And that's because a lot of people aren't going to be able to afford to build homes going into the next year. So I think the home builders are fantastic sells. That Lennar has come up a long ways here. I think it's going to be an awful back half of 2023 for the home builders. I just know the stuff. I went through it. And obviously I went on a custom home, so it's more money. But stuff is expensive. Like they're building, it's so expensive. And I just can't see who's going to be the person when mortgage rates are at 5%. Who's coming in and building these homes? Yes, they have the contracts, from last year. But are people signing up for new contracts? Are they going to be coming in here and spending, the amount? Yeah, lumber's come down a little bit, but labor hasn't come down at all.
That's
and labor is a huge portion.
It.
The labor will not come down. Labor is sticky. People don't take pay cuts. So if you think that all of a sudden you're going to get labor to come back down like lumber did, that is not going to happen. It's now the steel costs of way up, the windows, every single thing that goes into a house is so much more expensive than it was 2.5 years ago. So I can't see why people are going to be coming and saying, yeah, I want to build a house. My brother-in-law, case in point, was looking at building an addition on his house. He got the quotes and his jaw is hitting the thing because he's like, he was expecting it here and you get the quotes over here and you're like, this is insane. So he's like, so what he did was he just turned around and bought a different house. So I think you're going to see a lot of that. I think it's going to be a very, very bad year for the home builders. I think they're all value traps. That is my opinion. I don't have a crystal ball. I'm not in the future. I didn't become Marty McFly and fly to the future. I don't know for certain. Nobody knows anything for certain. We're all making educated guesses. But with interest rates higher, logic says people are going to not have as much money to buy all these, new homes. So I think the home builders are going to have a very bad year.
Worry about the people that are on the, the variable rates too.
That's going to come to roost.
Yeah,
that's going to come to roost eventually. Even on a 5-year fixed. Well, at 5 years, if rates stay up for the foreseeable future, that will become a problem.
And the lag effect,
the variable rate
right?
has went. Where is it, Joel? Where is prime? 6.5, 7.
Yeah, 7.
From
Soon
2?
to be 10. It looks like it.
I mean, this is the home builders. I think are the one place. It's an unbelievable rally. The reason they've rallied is because people are just dumb and they look at what is a low PE. Oh, the home builders have a low PE. I want to buy low PE stuff. Look out a little bit further. Is this? I would like healthcare low PE, more sustainable. I don't want to come in here and be buying home builders that when you go into a recession, this is ground zero for people not doing stuff. So I think
you guys remember Zillow?
rough year. We had a Pulte. Pulte was on CNBC, and obviously he's not part, the Bill Pulte. You follow him on CNBC, the philanthropist, fantastic person. He was on CNBC, and he was saying it was going to be a rough year for the home builders. Who's going to know it better than Bill Pulte, the grandson of the person who created the whole thing? Pulte Homes. So I think I'd be very, very cautious falling for the value trap of home builders.
Keep an eye on 45 in Pulte. I just took a look at it. Had the nice pop. Everything popped on that CPI number. I broke out for 45, bounced off at one time. Now you're coming down again. So don't know how many Pulte home traders we have, but not holding 45 here. Next daily low is under 44 in Pulte homes. And I was just looking at the HXB as well, just that clinging to $60 here. That was the low yesterday. You got some air underneath that, down to 58. So they had a nice rally, just like everything else, man. That CPI data that high. The S&Ps are now 340 handles off that high from a week ago today. Unbelievable. Big decline heading into the end of the year. S&Ps are shrugging off that number, trying to go green once again.
Trying here. Again, let's just take it back, though. We're in this market here, and we're going to go to our guest here right now. We'll get on Angie, but I just want to finish the point. I mean, you're kind of feeling like, I feel like this is a little bit of the death by 1,000 cuts phase, where we're down 2-3%. Then the next day we're down 2-3%. It's been like S&P's been down 2%. And all of a sudden you're like, Joel, we just lost 10% in a week, and nobody's talking about it. This is like they're chipping away at it. It's not just been straight down. There's been a few little rallies in there, but holy macro, this has been an ugly 5 days.
That's how you know that more than likely that last price action, and this is the bad part, it was probably that dead cat bounce, right? I mean, we consider dead cat bouncing a lot of that, really that whoosh right back up, tight consolidation, and look at the move back down. I think when it whooshes back down, that just shows us more and more that the price action was actually towards that bottom. We just played a bounce. And now the only thing that we need to watch out for is those lows. Do we go breaking through those lows sometime maybe
3,500? It just seems like they're chipping away. But let's talk some commodities here with Angie Setzer.
Let's do it.
Good morning, Angie. You frying up some bacon this morning?
Whatever it takes to generate an audience, right? That's what doing, so.
All right. So just what a chipper day here. What do you want to talk about? China demand questions, a hawkish Bank of Japan, or Brazilian corn Brazilian corn exports? Pick your poison here this morning, Angie.
Well, I mean, I think your Brazilian corn exports fit nicely in with Chinese demand. But I mean, when it comes down to it, we're talking about the slow grind that you guys were talking about. And I think if you look at, a wheat chart, a corn chart, the only thing right now that seems to be kind of just managing to defy gravity has been soybeans, at least since late summer. So I don't have them. I can pull them all up separately, but I'm not one of those people that's going to throw a bunch of charts at you. I wish I was. But I think when we talk about a lot of what's going on, like we're in the commodity space, we're in a sort of transition as well. We're moving from what was a really sharp increase in demand that was exacerbated by some reductions in global supply availability. And then we have all of these issues that are starting to arise with inflation and the outside money coming in and this, that, and the other thing. And so right now we're sitting here kind of trying to figure out, do we see a transition away from what has been tight ending stocks, tight supply availability, questions about our ability to really kind of provide food, even though I've always felt that those questions were a bit dramatic. Like we have more than enough to cover what we need. It's just a matter of getting it there. But do we see this move away from the rallies, the multi-year highs? You've kind of encouraged significant production increases out of Brazil. You're seeing much tighter relationships with China and other global suppliers, Russia, Brazil, Argentina. And so the U.S. is sitting here kind of wondering, U.S. farmers, what happens next? What happens as we move ahead into 2023? And at this point, a weather surprise would be the only bullish thing that we'd really be looking at.
Angie, I know we had a conversation during different courses of the pandemic, and you said, "Don't worry, we're not going to run out of food." Don't worry about that, Joel, and assuage my fears. But I just want to get your take on where the commodity prices are, the data that we got last week, and then also the different factors, and it feels like I look at these charts, it feels like inflation's coming in, at least in reflecting these commodity prices. I mean, I know you look at the equities as well, but we had a good number. I know Powell's saying he's still pounding the table here. Do you just think, I don't you think we've turned except for the beans? The beans are still in the teens, and that chart still looks strong. But man, oh man, I mean, what's right? Is it right that we got the pop that inflation's coming in, or is it right that Powell just says no? I don't care what that last number is. I'm still keeping my foot on the pedal, and so far the market's taking his cue.
Yeah, and I think they have to. I mean, we've really been under this sort of don't fight the Fed, right? Since like, I mean, I've thought that, or I've been told that because I've been I'm like, what the Fed's doing, that's unsustainable. We're going to run into these sort of situations, right? I've been one that is almost been fighting the Fed to a certain extent, and everyone said, don't fight them. Well, why are we doing that now? Why do we continue to kind of focus on this sort of pivot, this idea that things are going to turn around? I mean, truly, I feel like at least if you look at the speculator position, the outside money that's worked its way into commodities, you've seen speculators make their move into the short side of wheat. They're actually the shortest they've been since May of 19. Corn, we saw one of the biggest weekly sell-offs and outside money interest a couple weeks back that we had seen since August of 20. So we've had some exits, some pretty mass exoduses of that outside money that we had seen come in. And now we just kind of sit here and wait to see what happens, which a lot of that hinges on South America. We've got some issues in Argentina. And then, of course, the $1 million question becomes, when does that Chinese demand return? And does it to the U.S.?
Definitely, especially China. That's a whole nother game of mixed signals. But when it comes to inflation, what do you expect that could be having some trouble next year? And what do you expect that, no, this is looking a lot better than the situation that we had going into last year?
If you mean, from a pricing standpoint, or you mean from like a supply pricing standpoint, I think what we'll see is I think the energy costs are going to come down, which will help domestically. Speaking of distillates, diesel specifically, because that has had a big influence on, the farmer uses everything. Everything in agriculture basically kind of revolves around energy and distillates, and so I think we'll start to see that come down. I think you're seeing fertilizer prices start to come lower. You've seen the UN really push as part of the deal, the Black Sea trade agreement, or the Black Sea grain corridor agreement, is to start really kind of pushing Russian fertilizer supplies into the global market structure. We had seen our trade commission basically roll back sanctions or tariffs that they had put on Russian fertilizer prior to the whole entire invasion. That came off in the last 3 months here, where they were like, never mind. So I think you'll see some input costs start to come down for the U.S. farmer. Or at the very least, it's not going to increase. So that's one of the things that I think would be a positive. But unfortunately, I think it's going to be tied with probably future lower commodity prices, grain prices, soybean prices. Wheat feels low for everything that we've been looking at, but it's still historically elevated. I mean, you could say it's $1, $2 higher than where we've traditionally seen wheat trade. So I'm not going to say that it can't move lower. I've seen this game before. I was here in 08, 09. I was here in 13, 14. We had some pretty significant shifts in monetary policy, obviously 08, 09. And then we had, a shift in supply concerns in 13 and 14, and so I'm never going to say that things can't move lower than they anticipate, but I feel like you will start to see at least the ag space really calm down here, especially as the global end user kind of recognizes we aren't going to run out of stuff. Like, we have enough. We just have to make sure that we have enough cash to get it moved around.
What about at the store? Should I expect any prices going down in the grocery stores?
You hope so, but I've never hold my breath. It's kind of like what we joke about in ag. I say inputs are coming down, but we always joke that once they go up, it's hard to get them back down.
That's true. That is true.
Angie, what about the weather? I mean, doesn't it seem like it just gets more and more unpredictable? I mean, people are having I don't even have any kids in school, but like if you're a kid in Michigan, you got to be bummed because like you're missing all these snow days. I haven't even had a snow day on the radar. I mean, this
Right?
weather has become so unpredictable. Is that, how's that affecting the upcoming planting season? And what are they saying out there in the fields?
Yeah, I mean, right now it's winter. We're still real dry across a large portion of the western corn belt. My cattle friends have taught me that the best time to have a drought is in the winter, so they're not overly worried. We'd like to see that kind of transition before the spring. We're looking at a potential breakdown in La Nina, and so La Nina is basically set a record by being present in the global atmospheric and oceanic conditions for the last 3 years. La Nina tends to create droughts, especially along the western portion of the United States, California into, east to the Mississippi. You've seen it really hit Texas, Oklahoma, Kansas, which has hit our U.S. wheat production. And then you've seen it impact. That's been part of what we've had as an issue in South America for the last 3 years is you had that Brazilian production issue in 20, which was La Nina caused. And then you had southern Brazil and Argentina last year. And now we're kind of seeing that center a lot right on Argentina. And so the idea is that we'll see that breakdown as we work January out into the spring. And then hopefully we continue to see it kind of transition over into more of an El Nino type atmospheric conditions, which would be good for production and really kind of help bolster those global stocks that we've been worried about.
All right. And just the Ukraine, the war, wheat prices, I look, they topped up over $14. Now they're cutting half on that. Really not the desire to, I mean, over speculation there. I hope you're selling those forward contracts as fast as you can. No one talks about the war anymore. Just talk about the short and long-term impact of the war in Ukraine on wheat and other commodity prices.
Yeah, I think we get some bounces, but I think you've noticed that the headline the headline bounces don't last near as long and they're nowhere near as deep. You know what I mean? So we had the Russia pull out of the export corridor. We topped $9 on the July and then just really kind of promptly fell apart. And so I feel like kind of what I said earlier, the global end user knows that they're able to source supplies, at least at this point. The worry of us being out of food or not being able to access it, was really kind of something that was more of a dramatic, like worst case scenario outlook. And so the reality is we know we'll be able to get it. We just have to be patient. We have to be able to access the cash. You've got a bunch of world leaders that are kind of working behind closed doors. And so I think one of the things that we saw with Russia pulling out and kind of within 3 days, the UN working on getting them back in, is that Russia's going to push this as far as they can, but they can't limit fertilizer. They need the fertilizer exports out of their country. They need those grain exports out of their country. It's the best way for them to generate cash. And so they're going to push it as far as they can without completely shutting it down.
All right, sounds like you got an unhappy one there in the background.
I have a very angry child on my hands. Someone needs to call Santa.
Okay, Angie Sester, co-founder, partner, Consensus ROI LLC, joining us here on Pre-Market Prep to discuss the commodity markets. Angie, always a pleasure. I always say I'm going to make it out. You're not too far away from there. I'm going to do that in 2023. Check out the operation.
We'll
Thanks
add it
for
on the
joining
to-do
me.
list. Yeah, I appreciate you guys having me.
Okay,
Have
thank
a good
you,
one,
Angie.
All
right. D, you're back. You're back.
I was there on listening.
He's in the cave. He was in the cave. That's all.
I'm trying a little damage control here on these S&Ps, chopping around here. So I've worked out the Netflix damage control, but we got to work out all the other damage here this morning. It's a damaging day. You get
Chop
that with
fest.
trading.
That's what I say.
What's that? What do you say, Mitch?
Chop fest. That's what I say.
Oh my gosh.
Let's go to General Mills, though. Are you getting your cereal this morning? Let's take a look at General Mills as they reported earnings today. Their EPS coming in at $1.10, beating the $1.06 estimate. Sales at $5.22 billion, beat the $5.19 billion estimate. They raised fiscal year 23 organic net sales growth expectations from 6 to 7% now to 8 to 9%, and also raised EPS growth expectations from 2 to 5% now at 4 to 6%. So raised guidance, stock that has been really strong, and look what they do to it in the pre-market.
Trading 21 times forward earnings. I mean, why not be in cash? You want to buy this? What? If you're really worried, if you're so worried about a recession next year, yes, General Mills will hold up well. You know what I hold up better? Cash. So the Tina trade here. It's had a ridiculous run, General Mills. It's been unbelievable, unwarranted, in my opinion. This is just people that money managers that have to stay in stocks that are moving from growth and trying to find like safety. I need some safety, and they're moving into this. I think this loses no matter what going forward, and maybe I'm wrong, but I just think like if we don't go into a recession, this stock gets hit because it's crowded and safe. And if we do go into a hard recession, they come for all stocks. So I think if you're looking at General Mills, look to cash instead. That's my opinion. Stocks come down here. If it was down at 70, 65, getting down to like 16, 17 times earnings, a little more reasonable, but it's trading 21 times forward earnings here. It's not cheap. We're not in Kansas anymore. We're not in this environment where money is free. I think there's better places. I think cash, if you're looking for safety, I'd rather be in cash than GIS.
Street leaning the wrong way into this one, rallying stock the last 2 days, just might even created a new all-time closing high in yesterday's red tape at 87.12. That's it. Well, actually, all-time closing high 87.33. So anywhere in that 87 area on a pop. The bottom of yesterday's range, 86.53. We're well below that. I'll give that 2-star resistance. And on the dailies, if you're, I don't know how many people are short this, but there's nothing until 82.5. Now, I know that's another $2 away. This does have, kind of crazy bounces of, and retracements. Sometimes when it way up, it comes in, and when it's way down, it rebounds. But if I was really trying to get this on the cheap over the next couple days, I'd be out there a little bit ahead of those trio of lows at 82.40ish and 82.50. But once again, street leaning the wrong way into this report, and it's down on 98,000 shares.
All right, let's get into Lucid as they announced a capital raise of approximately 1.515 billion. Of course,
Not my capital.
it is getting a little bit of a push up here. It's gone down to $7. I think it could get maybe a little bit of a push based on this news, but how long and how far can it go? I don't even give it past 8 today, but we'll see what happens today.
All these rallies have just been selling opportunities for all these stocks. We've hated Lucid. I put a $5. I said, and obviously I don't price targets and stuff, but I can
Lucid dreaming.
Remember back in the summer, it was like 35, and I was saying this thing could go to $5, like it could, because it's that overvalued. We're at 7, so I'm going to stick with my thing that I think this could go to under $5. Are they going to go bankrupt? Some of them are. I don't know if Lucid's going to be the one, but the value, they don't make, companies that don't make money, they just don't want them. Now, I don't know if that changes. Maybe if we go, they start lowering interest rates again. But until the Fed actually does talk about pivoting, I don't think you want to own any of these stocks.
Got to pop to 780. That is right around your 3-day high at 782. So you backed off on that. New low. New all-time low yesterday at 705. Maybe you'll find if you go into your retreat, I'm sure a lot of people would like to see that close from yesterday at 723. I'm just looking back at this one, and it just had that super long consolidation period right around between 950 and 1050, and then it broke down. Big string of lower highs that's going to probably be broken today, but like when they do these offerings and these capital raises, like who was the one that did it? The Novavax, right? I mean, how do they get people to give them money? With the kind of
still find
performance.
them.
I just
somehow, some way, man.
Unless they're getting some unbelievable rate of return.
They're getting higher rates for sure, but
Yeah.
I don't know if it warrants the risk. I think some cases they're, getting like, there are some cases they're probably getting 13, 14, 15% maybe. I don't know in the Novavax case. But I for me to put my money in there, I'd want 20. I wouldn't do it even at 20%. I wouldn't give Novavax money at 20%. No way.
What if you had to do between Novavax and Lucid at 20%? Which one would you take?
Oh gosh. Oof.
Or beyond me.
Probably Lucid.
How about
Novavax is selling a vaccine that nobody like. We
don't have the vaccine.
2 years ago, we needed it 2 years ago. Holy!
I got
talk about
something for us here.
mismanagement.
I got something for us here.
What
This
do
is
you
going to
got?
be a race between a Lucid, a Tesla Plaid, and I think an Audi R8. I think that's what's in this video. But supposedly
Nice
the
cars.
Lucid wins here. I've talked about it on my Twitter that I think it might be a little BS on the low, but who knows? Let's see. Let's take a look right quick.
Are you bullish this Lucid?
This is
long-term,
a
Mitch?
quarter. Who's gonna win, man? Who's gonna win? I feel like the Lucid's not the low. But look at that. The Lucid's on the right. Tesla Plaid on the middle. Lucid, baby. That's what they're saying here. Look at that. Look at that Lucid take off.
Look at that. Hey, who the hell's buying a car like that?
That's it. 2023.
Yeah, that's the top of my list. I'm gonna go out and look
And you
for
know
one
something,
today.
and here's a conversation too. Obviously, we're getting towards the end
Who
of the show,
wins?
but I was talking to another friend up here. He runs does like major landscaping for like a lot of rich people, and he's like, people are pissed off. He's like, well, I'm like, you must still be doing pretty because the rich are the rich, right? And they're still going to do their jobs. He's like, you won't believe it. He's like, people are mad that the stock market has been hit and they're losing a lot of money and stuff, and then they're backing off on projects just because they can afford to do what he was saying still, but they're just mad. So they're not doing these projects. So, and somebody was saying that on CNBC yesterday, when the rich get ticked off enough, they just shut off their spending. They're just like, nah, I'm mad. I'm like, not buying that Lucid. I'm not doing that big landscaping project. I'm not doing this, other project here because, we lost a lot of money in the market. I'm just pissed off. Not that they can't afford to do it, but they just get pissed off about it.
And they can wait for interest rates to come down, right?
And
they don't need to be buying at high interest rates. They can just wait.
Well, they don't even. If you're rich, maybe you don't even need it. Maybe the interest rates don't impact you.
Yeah, you're buying cash.
But I think you're going to have some of that happening. Like at the end of the year, people are like, "Holy, I lost this much in the stock market. I'm not buying that Lucid right now. Nope.
Yeah.
Just mad about it." So I mean, that stuff can get hit too. So I just think it's a tough environment. I think it's a cool car. I think if we were in free money environment here and lower interest rates, I think maybe I would be long Lucid at this price. But the recipe for the macro environment just doesn't add up for me to go and get excited about buying Lucid stock, even though it seems cheap relative to where it was.
Is there anywhere safe? Growth, value,
health, drugs. Yeah.
Okay.
So go low PE and look for drug stocks on significant pullbacks. It's why they've been unbelievable performers. Again, they've run too far. Like I said, I just told my mark. They've kind of run too far, but we're going to eventually get a pullback in the drugs. You're getting one in Gilead today. Not saying I'm buying the initial dip here in Gilead. But I have no position in it. But it had drug news that came out. You're going to get opportunities here. There's going to be pullbacks in the drug names. I think that's where you want to focus. I think that's where you want to go because the P's are all fairly low as well. Some of them are a little bit overextended, but they've just had such big runs. I need pullbacks in those now too. So I mean, none of these stocks. It's unbelievable. The market's down like it is, and you got AbbVie right up near the highs. You got Merck up near the highs. The money's crowding into these names too. So I think that's where you want to be, or cash. Now again, there's going to be a fantastic buying opportunity somewhere. I just don't think it's right now. I just don't think even though some of these stocks and Amazon's JP Morgan's top pick, and maybe we could talk about that too, Joel. And they just came out as Amazon, their top pick for 2023. I think there's still pain ahead here, and I don't want to be too early. I started nibbling on some Amazon on my wife's account at $100 or $103 or whatever it was, $105, and it's wrong. So it's wrong. How do you know it's wrong? Well, the market's proving you're wrong. You're down in that position. Disney nibbled into that one too early. So I'm like, I just don't want to be early anymore.
This is why I'm worried about Apple. I'm worried about it.
Yeah,
we're going to those daily lows.
I'm worried about Apple too. I have no Apple, and I hedged my 10-year position. I'm hedged right now. Still
Look at that monthly.
I don't intend to. I may lift the hedge. I may not.
No, don't lift it. You put it on for next year.
I don't hear that often from Joel.
Yeah, don't.
So
Until this thing, you're at 155.
And not sell it is one because it's a huge gain. I'm like, my average cost basis on this thing is like $20, $25. So I'm like, I don't, so you got to analyze it from that perspective too. Is like, do I want to realize that? But I can hedge it for a bet and then reanalyze. And maybe you lift the hedge and not pay the gain.
Love that.
Maybe you just let it go and pay the gain. I don't know. I said it yesterday on the show. I think Apple could go under $100.
I actually
It took
love
out that
idea.
134.5. We've been talking about that area forever. No such thing as a quadruple bottom, and had the weekday on Friday. Someone's got their pedal on the metal here in Tesla too. We're down 275. 2.5 million shares have traded. That, to me, I think that's a lot of value in the pre-market. You looks like you're headed for yesterday's low at 145.82. Mitch, you seen anything out there on Tesla, maybe the analyst move or something, because this is just, they just don't like Musk. Then what is he switching to his thing on Twitter Blue now? You have to be on Twitter Blue to vote on these polls or something. Is that he? Man,
I'm
Is that
gonna
really
have
what
to
it is?
pay too, ain't I, for that blue check mark that I got, the legacy one. They said they're gonna take that away from me unless I start paying the $8.
Yep,
So
we're gonna
I
have to
have
pay,
$8 a month
Dennis.
for that blue check mark.
Gonna have to pay. I myself am getting even the copy accounts, man. So we're gonna have to pay.
Oh
Dennis.
yeah, like they'll start
need to-
copying you. If
we
you
need
don't have
to
the blue check mark, they start copying you. There'll be a blue check mark, then somebody else will buy it. They'll fool them, and somebody else will probably buy the blue check mark of my name. Why, that's not me.
All
They're
right, just to
lying.
wrap up
Yeah.
here, I'll give you guys a couple of ratings out there. Rocket Labs, well, not a rating, but Rocket Labs, RKLB, not being able to launch their first rocket launch from the U.S., delaying that. That took a little bit of a beating there. Stitch Fix, FFXIX, was downgraded to neutral from underweight from JP Morgan. And the last one, I'll give you guys TDD. The trade desk was rated overweight in new coverage from Piper Sandler. But that's going to do it for us. Any levels to give on the SPY, Joel, before we get you out?
Yeah, I'm just looking at S&Ps are shaking up a little bit here. I would just say we still have, I'm going to block out that 0350 low from last night. And I'm going to say mid-range on the session, 38.30. As long yesterday's low is still a valid number, 27.25. We lose that, as I mentioned, on the dailies, and nothing on the dailies in this until 37.82. So that's why I don't know if that's going to be happening today, but that's what the daily charts are saying. Money Mitch, good to have you back. Triple D, I'll be checking in with you in a little bit. Everyone have a good day.
All right, Joel's getting out of here. Dennis is out of here, and that means it's time to bring you guys over to some live trading action. We had some yesterday with Lord Ryan and some special guests. Come over now as I go ahead and join the team. As we get into the market, let's see what we can do today. Still got the swing on the Stark Life. Let's go find out what's going on in the markets. Let's see what I got up my sleeve. I'll see you guys over on live trading. Don't go anywhere. Just stick right here. Benzinga TV up next. And I will let you guys know later today, we are releasing a video from Adam Johnson. Adam Johnson talking about 2023 outlook. So if you guys want to hear from an expert, the man himself, Bullseye Brief, Adam Johnson, join us today. That's going to be at 1 p.m. Eastern. Don't miss it, team. Right here on Benzinga. Get your 23 outlook from Adam Johnson. And of course, we will also be doing some interviews and some updates on stock market movers this week. That starts at 1 p.m. Eastern. Don't miss it all week long. If you want to get a look into 2023, especially next week, as we start talking about what we should be watching, will we get that January effect? I'm already moving past Santa Claus, but let's talk all about it on live trading. And of course, stock market movers. It starts at 1 p.m. See you guys there.
We'll be right back.